what makes carbon credits then very interesting over that time period is it's a unique commodity in that it is regulated, and the price is being regulated to go higher to encourage a reduction in emission. It's quite a unique commodity in that sense. And the only way to get corporations around the world, individuals, governments, to reduce emissions is to put a price on emissions.
Hello to viewers of Assay TV. In this edition, we are catching an insight on carbon streaming, which is an innovative, newish company. And I'm catching up with Justin Cochrane, founder and CEO and director of the company, who's going to tell us all about the business. Justin, welcome.
Thanks very much for having me, Adam.
Yeah, thanks for speaking with us. And look, it's really interesting to get your initial top-line view. What started carbon streaming, and could you also tell us a bit more about what's under the hood of the company?
Yeah, absolutely. So we started the company about 4 years ago, and really the vision was to utilize this business model that we have from the mining and energy space, so this royalty and streaming business model, and apply it in essence to a new commodity, and that commodity being carbon credits. With the simple fact that we believed, which was a lot more capital needs to be allocated to projects that help to reduce emissions and absorb emissions from the atmosphere if we're serious about fighting climate change and meeting our Paris Agreement commitments. So we set up carbon streaming to do exactly that: invest in projects, take a stream of carbon credits through our investment and help sell those to corporate buyers and maximize value for shareholders. And of course, create a vehicle that could give investors leverage to the climate change thematic, which is hard to do. We can do that through base metals and investments, of course, battery metal investments, but this is another interesting take on that space.
Absolutely. Excellent. Okay. So your business model is still quite different from streaming and royalties as such, though. You've learned some sort of skills and capabilities there, but how does it play into the carbon streaming sphere?
Yeah, so our model is a bit different from the mining and energy space. The key difference is we're generally providing the capital to expand or develop a carbon project around the world. So when you think about a carbon project, think a reforestation project or a forest conservation project. So those are examples of nature-based projects, which is the largest part of this market. So we invest the capital into the project. We then generally will take 100% of the carbon credit. So again, unlike mining, where you're taking a small share or you're taking a byproduct of a primary product, here we're actually taking 100% of the carbon credit. So that's the economic value that's created. And then we have a large sales and marketing organization that will then go out and help to find those corporate buyers and partner with corporate buyers that are looking to purchase carbon credits to help meet their sustainability goals, meet their biodiversity goals, help mitigate the environmental impact that company might have on an annual basis. And so that's that. And then when we sell those credits, we then will keep a minority share of the revenue, and the vast majority of that revenue goes back to the project developer to support operations and further development. So we truly become a marketing and sales sort of agent, partner, long-term partner with these project developers and give them the capital to do what they need to do.
Yeah, excellent. Let's get into the detail of these project developers. So what makes a credible developer? What makes an impactful, if you like, carbon sequestration project that you would sort of consider working with or push forward to your stakeholders as well?
It's an excellent question. There are 6,000 carbon projects in existence today. We've got 22 different projects in our portfolio today, spread around the world. We spend a lot of time thinking about, how do we ensure that we're investing with a high quality partner in a high quality project. So we do a lot of work ourselves, both with our internal carbon team and external carbon teams. What is absolutely essential to all carbon credit projects is that you can reliably measure report and verify the impact that these projects are having. Sometimes that's easier to do than others, but you're comparing it to a base case. What would have happened in this forest conservation project in absence of a carbon project? And then, what is happening today? And so there is a lot of proof, a lot of work, essentially creating a feasibility study or around, what the project activities are doing to prevent emissions or to absorb emissions from the atmosphere. So you need to be able to, have that reliable third-party analysis. We do a lot of homework ourselves. The great thing about these projects is that all of the information does show up on public databases and registries. So there's very, very excellent access to data and reports and analysis that is done by third parties. For a project to issue credits, it does have to go through several layers of independent analysis before a credit can be issued and then sold to a corporate or individual or government buyer. So there is, and those, there are standards that need to be met. Those standards improve every year. With 6,000 projects, not all 6,000 projects are great projects. We at Carbon Streaming are making sure, of course, the ones we invest in are. And the standards in these projects continue to evolve and improve on an annual basis, which we're excited about.
Yeah, certainly. It's exciting sort of thinking about those 6,000 projects. Where typically are they based? Like, are you all around the world?
Yeah, they are all around the world. We're operating ourselves in 12 countries already around the world. But we've got projects in, a handful of projects in North America, in Africa, in Southeast Asia, South America, of course, as well, where you've got the Amazon. So there's, they are sort of spread around the world. There's a lot of interest in projects in Europe and North America specifically. Of course, when you think about nature-based projects in forest conservation, it tends to be in the global south, where we need to invest capital to protect forests and restore ecosystems. So a lot of our work and projects will be down there as well.
Yep. Excellent. Okay. So I want to touch on why the voluntary carbon markets are really important. And then also this idea of voluntary, because it's from my sort of limited understanding, things are becoming less voluntary. It's going to be mandated. It's going to be mandatory for corporates to have to be involved in projects like this or meet certain ESG criteria when we think about what everyone from governments to exchanges are requiring now, particularly a public company.
Without question. So we have this notion of a voluntary credit, but of which the word voluntary really is talking to the fact that these corporations are not regulated yet to be buying credits, so they're voluntarily choosing to buy credits to help meet their net zero ambitions. But of course, the number of companies that are committing to net zero ambitions increases almost daily. And as a company announces a net zero commitment, it's now a commitment that its stakeholders, whether it's customers, shareholders, investors, financiers, are all now aware of, and it becomes a little less voluntary in that respect. But then I think the more important part, the point that you made, Adam, is we do see this this overlap and significant overlap and kind of merging between the compliance market today. So those regulated emitters, power companies around the world, right? Energy producers around the world. So your regulated emitters and the unregulated emitters today. And the reality is, over time, as we're pursuing a net zero ambition, the likelihood of those merging, we think, is very, very high. And what we see from a market perspective is carbon pricing in regulated markets is much higher around the world than it is in the voluntary market, as you might expect, right? But as regulations increase, as scrutiny increases, we expect that to be very positive, not only for demand, but also very positive for pricing as well.
Yeah, excellent. It's a really interesting dynamic. So on the upcoming catalyst then for your company, but then also the sector as a whole, could you sort of provide some insight on the trajectory there? And then also, I guess, it would be relevant to sort of investors looking, but then maybe also corporates who are looking at this as well.
Yeah. So in terms of catalysts, we continue to see increasing corporate interest, as I said, almost daily in these net zero markets. We continue to see efforts around the globe to standardize and bring more transparency to carbon markets. Bringing more transparency, liquidity to this market will be extraordinarily positive, as it'll give both buyers and sellers of carbon credits a bit more confidence in what they're buying or selling is the right value at a high quality credit, for example. So there are efforts around the globe underway to do that, which is extraordinarily positive. And we as a company are expecting issuance from over 10 of our projects this year. So getting delivery of carbon credits or royalty payments from over 10 of our projects. That for us as a company is going to be our first chance to really show material revenue and cash flow on our portfolio, and that will continue to expand and grow over the coming years. At the same time, of course, as I mentioned, we have a large sales team that is working with our project partners and with corporate buyers to marry the two. And so we are working on a number of partnerships on the buyer side, which we hope to be able to announce in the near term. And I'll just give you an example. We recently announced a reforestation project in the Western US with a group called Mast Reforestation. That has been extraordinarily well received. What we're doing there is helping Mast replant and restore post-wildfire regions and lands, private lands in the Western US. We give them the capital to do that replanting, restore that ecosystem back to its natural state, plant it in a logical and fire-resistant way. So of course it doesn't happen again. We're thrilled about that partnership and have seen just a tremendous tremendous response from corporate buyers who are interested in that project, and we hope to do more of those.
Yeah, excellent. Thanks, Justin. And just if I could finish there by sort of adding around the mentality, maybe for people interested in carbon streaming, is that these are long-term projects, right? There's sort of a long-term view here of where this sector is going, and how you sort of bring the royalties model and the projects themselves into fruition.
Yeah, that's exactly right. Like a multi-billion-dollar mine, these are 30, 40, in some cases 50-year projects, in some cases 100-year projects. So these are long-term partnerships. As you can imagine, replanting a forest or protecting a forest is not something you do for a year or 5 years. It's something you do for decades. And as a result of those activities, you're able to issue carbon credits for decades. And so these are long-term partnerships. We are not doing short-term offtake deals for 3-5 years. We're entering into life of project offtakes to really be a partner to support these projects and get more of these projects off the ground. I think what makes carbon credits then very interesting over that time period is it's a unique commodity in that it is regulated, and the price is being regulated to go higher to encourage a reduction in emissions. It's quite a unique commodity in that sense. And the only way to get corporations around the world, individuals, governments, to reduce emissions is to put a price on emissions. And the only way you can put a price on emissions is through carbon, is putting either a carbon tax or putting a price on carbon. And that can be done through both the voluntary market and the compliance market. So very excited about the potential for this. We don't believe this is a 1, 3, 5 year opportunity. We believe as we move to net zero over the next 30 years, the conversation is going to turn to net negative. How do we start absorbing more carbon from the atmosphere than we emit on an annual basis? so this is a conversation that we will be having, or somebody will be having anyway, 40, 50 years from now. And that's what we love about this business.
Yeah. Fantastic. Excellent. Really good to get an insight on carbon streaming and the model that you've applied here very innovatively. And of course, we hope that we can catch up again on some of the project announcements and offtake deals that you have further down the line as we take this future-looking view. So thanks for speaking with Assay TV, Justin.
No, thanks very much for your time, Adam. Looking forward to digging into some of the projects in future chats. But thanks for your time today. Really appreciate it.